Ford Motor Company is facing one of the biggest financial disasters in its 120-year history. The legendary automaker has just revealed staggering losses of more than $9 billion, sending shockwaves across Wall Street and raising questions about the future of the entire company. This isn't just about numbers on a balance sheet. Behind these losses are 25,000 jobs now hanging in the balance. Entire communities built around Ford plants could be devastated if these cuts move forward. Families that have relied on Ford paychecks for generations suddenly find themselves staring at an uncertain future. To put it in perspective, $9 billion is more than the annual GDP of some small countries. It's a figure that doesn't just reflect poor performance. It signals a crisis that could reshape the American auto industry. Investors are panicking, dealers are struggling, and customers are losing confidence. Ford stock has already taken a hit, wiping out billions more in market value in just days. What makes this disaster even more shocking is the timing. The U.S. auto market is already fragile, with rising loan defaults, falling used car prices, and consumers stretched to their financial limits. Instead of being a safe bet, Ford has become a company caught in the storm, and its problems are only adding fuel to an industry already in crisis. Analysts are warning that this $9 billion loss could be just the beginning. Ford's aggressive push into electric vehicles has drained billions in research, production costs, and failed launches. Meanwhile, its traditional business, the trucks and SUVs that made Ford famous, is struggling under high interest rates and collapsing demand. The question now is simple, but terrifying. Can Ford survive this storm? If it can't, the fallout won't just be measured in stock prices and balance sheets. It will be measured in thousands of lost jobs, billions in vanished wealth, and an entire industry forced to face a new reality. Ford's $9 billion disaster is not just a headline, it's a warning. And the consequences are only starting to unfold. To understand Ford's $9 billion disaster, we need to look at how the company got here. This wasn't the result of one bad quarter. It was years of decisions, strategies, and risks that have now caught up with one of America's most iconic automakers. It began with Ford's massive push into electric vehicles. Determined not to fall behind Tesla, the company poured tens of billions of dollars into new factories, battery plants, and EV models. On paper, it sounded like the right move. The future of the auto industry was supposed to be electric, and Ford wanted to prove it could compete on the global stage. But the reality was far more brutal. Electric vehicles are expensive to build, battery costs remain sky-high, and Ford's EV lineup has struggled to win buyers. Models like the Mustang Mach-E and the F-150 Lightning generated headlines, but not enough sales. Dealers across the country are now stuck with EVs sitting on their lots for months, unable to move them even with heavy discounts. At the same time, Ford's traditional business began to crack. Trucks and SUVs, the bread and butter of Ford's profits, faced soaring production costs. Supply chain shortages made parts more expensive. Labor strikes added billions in costs, and high interest rates pushed buyers away, leaving Ford with growing inventory and fewer willing customers. Meanwhile, global competition only intensified. Tesla continued to slash prices, making Ford's EVs look overpriced in comparison. Chinese manufacturers entered the market with cheaper, feature-packed electric cars, threatening to undercut Ford in key international markets. The result was a company squeezed from all sides, losing money on its future, while its present became weaker by the day. By the time Ford revealed its $9 billion loss, the warning signs had been flashing for years, but management kept pushing forward, convinced they could spend their way into the electric future. Instead, they've created a financial black hole that threatens not just the company, but every worker and investor tied to it. This wasn't just bad luck. It was a series of decisions that led Ford directly into one of the most dangerous positions in its history. The cracks in Ford's foundation are no longer hidden. They're out in the open for everyone to see. One of the clearest warning signs is on the production line. Ford's factories, once symbols of American strength and efficiency, have slowed down. EV production targets that were once ambitious headlines have quietly been cut back. The F-150 Lightning, once hailed as the future of Ford trucks, has seen production slashed as demand failed to meet expectations. Dealers are reporting lots filled with unsold Lightnings, even as Ford keeps pouring money into building them. It's not just EVs. Sales of Ford's most profitable vehicles, its full-size trucks and SUVs, are falling sharply. With interest rates at 20-year highs, many customers simply can't afford $60,000 or $70,000 price tags. For years, Ford relied on these models to cover its losses in other areas. Now that lifeline is collapsing, leaving the company with fewer and fewer options. Dealers are feeling the pain firsthand. Across the country, Ford dealerships are flooded with unsold inventory. Vehicles are sitting on lots for months, forcing dealers to offer massive discounts just to move them. In some cases, those discounts wipe out nearly all of their profit margin. What was once a booming business is quickly becoming a financial nightmare. Labor unrest has added another layer of chaos. The United Auto Workers strike cost Ford billions in lost production and higher labor costs. Even after reaching agreements, the damage is done. Higher wages and benefits mean higher expenses at a time when Ford can least afford them. Investors have noticed. Wall Street analysts are downgrading Ford's stock, warning that the company's problems are deeper than expected. Billions of dollars in market value have been erased in a matter of weeks, and confidence in Ford's future is fading fast. The signs are clear: declining sales, unsold inventory, skyrocketing costs, and an EV strategy that's collapsing under its own weight. Ford isn't just struggling, it's sinking, and the disaster that was once on the horizon is already here. Behind every headline about billions of dollars in losses are real people whose livelihoods are now on the line. Ford's disaster isn't just a corporate failure, it's a looming human crisis. Right now, analysts warn that as many as 25,000 jobs could be at risk. That's not just a number. Those are factory workers, engineers, office staff, and support teams. Entire families depend on these paychecks, and entire communities depend on the stability that Ford has provided for more than a century. In cities like Detroit, Louisville, and Dearborn, Ford isn't just another employer. It's the backbone of the local economy. For every job at Ford, there are ripple effects across suppliers, contractors, restaurants, and small businesses. When Ford cuts jobs, it doesn't just affect the workers inside the plant. It affects every local business that relies on their spending. History shows how devastating this can be. In past downturns, Ford and other automakers triggered waves of unemployment across the Midwest, leaving ghost towns where thriving communities once stood. If Ford follows through with major layoffs, we could see another wave of economic pain sweeping across America's manufacturing heartland. And this time, the impact could be even worse. Unlike in past decades, workers today face higher living costs, crushing debt, and fewer alternatives. Losing a Ford paycheck in 2024 or 2025 doesn't just mean finding another job. It means financial ruin for many families already stretched to the limit. The damage doesn't stop with workers. State and local governments rely on tax revenue from Ford plants. If production slows or jobs are cut, funding for schools, infrastructure, and public services takes a hit. In short, when Ford struggles, entire communities struggle with it. This is why Ford's $9 billion disaster is more than a corporate headline. It's a crisis with the potential to devastate tens of thousands of families and destabilize entire regions of the country. And unless Ford finds a way to stop the bleeding, the human cost will only continue to grow. Ford's $9 billion disaster has left the company standing at a crossroads. The next steps will determine not only the fate of one of America's most iconic brands, but also the future of tens of thousands of families and the stability of the auto industry itself. Right now, analysts see two possible paths. The first is a painful restructuring, cutting jobs, scaling back production, and abandoning some of Ford's most ambitious electric vehicle projects. This could save billions in the short term, but it would come at a devastating cost to workers and communities. Ford would survive, but in a smaller, weaker form. The second path is far riskier. Ford could double down on its EV strategy, betting that long-term growth will eventually pay off. But with competition from Tesla and China growing stronger every day, and with consumers hesitant to buy expensive electric vehicles, this gamble could drain the company even further. If it fails, Ford may not survive the decade as an independent automaker. Investors are watching closely, and their confidence is slipping. Some are already comparing Ford's situation to past corporate collapses, warning that if the company doesn't act quickly, it could spiral into bankruptcy. Others believe Ford will be forced into partnerships or even mergers with foreign automakers just to stay alive. What's certain is that the next few years will be critical. Ford cannot afford another $9 billion disaster. The auto industry is changing faster than ever, and companies that fail to adapt will be left behind. Whether Ford becomes a survivor of this transformation or one of its biggest casualties remains to be seen. For now, all we know is this: Ford's $9 billion loss is not just a corporate mistake. It's a warning shot for the entire auto industry. No company, no matter how big or historic, is safe from collapse. The workers, the investors, and the millions of Americans who depend on the auto industry are about to find out just how fragile the system really is. The question isn't whether Ford is in trouble. The question is, can it survive what comes next?